Hey, hope you're having a great day so far. Today's January 27th, Wednesday, and on this post I'll be telling you about the overall crypto markets, which includes Bitcoin dominance and Bitcoin price action, before diving into Loopring and Stellar, LRC, and XLMUSD, and see what exactly are going on in these markets since the last time I've spoken. I'll be telling you about the bullish and bearish case scenarios for these markets for today, as well as the short-term price prediction on these markets, according to what I'm seeing on the charts. Before I begin today, if you guys are watching me on YouTube, do subscribe. If you guys are watching me on TradingView, do follow me. So I'll be keeping you updated on the latest crypto setups on my watch list, regardless if it's a good day or a bad day. If you guys do want to support me and don't already have a Webull brokerage account, you guys can use my referral link down below. They're still giving away 4 free stocks as of today upon a successful sign up and a qualifying deposit of $100 US, and I will also receive a referral bonus if you guys sign up under me. Please also read my full disclaimer below. I am not a financial advisor and this is not financial advice. I'm purely sharing my own speculations opinions on this market. I cannot tell you the future, and you should always do your own due diligence before trading or investing in this market, as it's extremely risky and volatile. If you guys have any questions or comments, please do only leave them in the comment section below. But I will get to them a lot faster that way, and I'll try my best to get to as many of them as possible. Now, see what exactly is going on in the market first. Most importantly, I do take a look into Bitcoin dominance. Let's see where we are comparing to what I said yesterday about if the price action is going to break this 200 MA on the daily time frame, which is still the orange line right here, pretty parallel with this upward trend line of this falling broadening wedge that we have broken out of quite some time ago back in November, which was what set off the Bitcoin bull run right here, okay, especially right here from about November to even just late December there. That was basically almost the climax of that bull run there, okay, for Bitcoin. Now, still, this is what I'm looking at right now on the daily time frame. It has not breached this daily 200 MA yet, so I'm still looking at this decision point for Bitcoin dominance. If Bitcoin dominance continues trending downwards, I would expect better price action for the altcoins in general, as opposed to if Bitcoin dominance was trending upwards. So this is what I'm looking for, and Bitcoin already had quite a bit of a dump today. As I've been saying, it has been running within this falling wedge pattern. Falling wedge patterns are bullish patterns. 68% chance of it breaking upwards, and I've been saying this for the past couple of days. You guys can verify that stat on your own. It actually does break upwards by today, actually tomorrow's candle, that is. Then I will see a measure target of about 46.5K approximately, which is a measure target only. May actually be different in real life price action. I would strategize accordingly if I was in this position. And as I've been saying, the daily 21 MA is still the key resistance that's above the pattern right now. So that's something I'm looking out for, even if the price action looks like it has broken out of this falling wedge pattern. That could still be acting as resistance. Daily 50 MA right here is still key support, and I've been mentioning this to be key support for quite some time. Price action went from about 32.5K all the way down to about 29.1. So quite a bit of a drop there. Did bring quite a bit of the altcoin markets down with it. Now, Bitcoin dominance is not too strong right now. It's only about 0.25%. So total altcoin market cap is trailing. It's actually a little bit, it fell a little bit more than Bitcoin price action itself. So that's pretty self-explanatory there on Bitcoin dominance. Right now, I am looking for the Bitcoin daily 50 MA to hold right here. If it does not hold, then the next level of key support I am looking at, would, like I said, and have been saying, would be the 3-day 21 MA. That would be the next potential bounce. Of course, if the price action on Bitcoin here continues breaching this daily 50 MA, I would still expect more of a drop for the altcoins. The magnitude of that drop will still depend on Bitcoin dominance. Now, we got a pretty quick bounce here from the daily 50 MA. Let's see if this will actually continue to hold the price action up and actually hold the altcoin markets up as well, because like I said, if Bitcoin price action continues dropping, I would expect the altcoin markets to drop as well. And then the next level of support I would expect to bounce from will be the 3-day 21 MA here. Okay, let's see if that holds. I would say that it's most likely going to hold, and this falling wedge pattern is going to hold as well, because this 3-day 21 MA is right underneath this bottom trend line. So those are going to be the potential bounces. Daily 50, again, since we have bounced already, I think this is the first time we have actually bounced off the 50 MA. So technical touches, okay, just one touch here. So I would still expect to be pretty good support for now. Like I said, if that does not hold, then the next bounce I'm looking for will be the 3-day 21 MA. And that is basically what I'm looking at for the altcoins as well, because when Bitcoin bounces, then I would expect the altcoins to stop falling at that time. Just take a look into Stellar real quick. Stellar, I have actually refreshed the Fibonacci retracement levels here, because now I do see this as a temporary top, and that the price action is going to be running a little bit more around this top for now until it actually breaks a new top. Okay, now we had a inverse head and shoulders pattern before on the 6-hour time frame. I think I've already discussed this last post on Stellar, and we had to invalidate it because we did get a lower close on the 6-hour time frame below about 28 cents. So we had to discard that inverse head and shoulders pattern. Now it does look like on the daily time frame, it looks more like a symmetrical triangle pattern right now instead. Symmetrical triangle patterns are continuation patterns, so bullish in this case will be a 60% chance of it breaking upwards. Verify that stat on your own if this pattern stays intact. The daily 21 MA is acting as key resistance, pretty parallel with this upward trend line. If the price action actually breaks out by the apex of this triangle staying intact, which right now it seems to be February 7th, that is the absolute apex of the symmetrical triangle pattern right now, then I do have a measure target, which is taken by measuring the distance of the opening of the pattern. I'm going to exclude these wicks, and then adding it back on top of the expected breakout point, and in this case would be the apex of the triangle, and I would get about 41 cents as a measured target. May or may not be reached, could also be overreached. I just tend to be more on the conservative side if I was in this position. So let's also point out a few things, as I've pointed out before as well. So there is bearish divergence on the 3-day time frame, comparing this high with this high right here. However, lower highs on the RSI indicates to me that the bulls are losing momentum on this high. So whenever I do see bearish divergence on a specific time frame, my conservative estimate is that it's going to come down, or at least meet the next closest moving average on that specific time frame. In this case, will be the 3-day 21 MA right here. That's pretty close. However, the slope is starting to flatten out, so it could take some more time before it actually reaches the current price action. Like I said, whenever I do see bearish divergence on a specific time frame, 3 scenarios will come to mind, regardless if it meets the next closest moving average or not. First one would be if the bulls are strong enough, it could actually take off without touching the next closest moving average, and therefore negating that bearish divergence. Secondly, if the bulls are not as strong, but still strong enough to hold the price up and consolidate within the pattern, which has been doing for quite some time, and has been consolidating within this symmetrical triangle pattern, not completely let it drop significantly down to the 3-day 21 MA when it had that bearish divergence. So it consolidated for a while. Let's see if it's actually able to consolidate for some more until this moving average actually comes up further to meet the price action. thirdly, finally, would be if the bulls are just not strong enough to hold up the price action and drops all the way down to the 21 MA. In this case, the 21 MA on the 3-day time frame is still about 21 cents, so about a 15% down, okay? So that's something to be taken into consideration on the 3-day time frame. On the weekly time frame as well, same scenario. I see a higher high here on the price action chart, but with the lower high on the RSI chart, that's still bearish divergence. So same three scenarios I would apply to the weekly time frame. Would the bulls be strong enough here on the weekly time frame to hold up the price action and not let it drop this significantly down to 14 cents right now, about 14 cents. So this is something I'm paying attention to. Now let's take it one step at a time, and I'll discuss my bullish and bearish case scenarios here. Bullish case scenario, price action breaks out of this symmetrical triangle pattern and go towards its measured target. If it actually does break out of this symmetrical triangle pattern, I'll be looking out at where the daily 21 MA right here would be, which is the blue line right here. It seems to be pretty parallel with the top trend line here, so nothing to be worried about just yet unless it just starts sloping up again. And then that could be acting as immediate resistance after it looks like the price action has broken out of this symmetrical triangle pattern. But right now it does not seem to be an issue because it's right underneath the bottom trend line, but that's something I would not lose track of. And then secondly would be the fib level right here at about 26.75 cents. That would be the next level of major resistance, even if it actually looks like the price action has broken out of this symmetrical triangle pattern. Next would be the next fib level right here at about 32.5 cents. So those are going to be some of the major resistances I'll be looking out for, even if the price action looks like it has broken out of the symmetrical triangle pattern. That's the bullish case scenario, breaking out of the symmetrical triangle pattern, go towards its measured targets. Bearish case scenario here, if the price action starts breaking this bottom trend line, the next level of support I'll be looking at would be about the 22 cent area zone. Okay, that's also the 0.5 fib level now, the refreshed Fibonacci retracement level. If that does not hold, the daily 50 MA seems to be pretty close in line, seems to be fast approaching then, okay? If that does not hold, then the next one I'll be looking at will be the 3-day 21 MA. I do expect that to be pretty strong support. Now these are my bullish and bearish case scenarios for XLM. Let's take a look into Loopring, LRCUSD. I have also updated the fib levels right here to reflect this temporary top right here, since we are getting quite a bit of price action around it now until we can actually make a new top, if we make a new top. So since last time, on the hourly time frame was where I was talking about. Okay, where I did see, let's re-illustrate what went on last time, just to do a quick recap here. Okay, there was a cup and handle pattern I mentioned last time. That was the bigger rounded bottom right here, followed by a smaller rounded bottom. And if the price action has successfully broken out of that neckline right there, I did mention that the measured target was about 62 cents from what I can re-illustrate here. Price action did not get as far, and that measured target was not met. Okay, measured targets, like I said, are theoretical targets, may actually be different in real life price action. So strategize accordingly, at least I would, if I was in this position personally. Okay, price action went as far as about 52 cents. So right now, it actually does seem like what I am looking at right now is also a symmetrical triangle pattern on the daily time frame. So basically, very similar scenarios with Stellar, XLM, what I just mentioned right now. Let's take a look into the measured targets here. As far as I can read it here, it's going to be above 69 cents. Like I said, measured targets are theoretical targets only. Now, that is the measured target if the symmetrical triangle pattern stays intact. Let's look on some of the higher time frames and see if we should be looking out for any red flags, such as overbought RSI readings or possible bearish divergence scenarios. On the monthly time frame, we don't see an RSI reading, so I'm not concerned here. On the weekly time frame, we are still in overbought territory above 70 here. It looks like it has pulled back a little bit though. On the 3-day time frame, there was double bearish divergence here. Comparing this high with this higher high, but with the lower high on the RSI, that's a loss of momentum for the bulls. And then one more higher high, but with another lower high on the RSI. Like I said, whenever I do see bearish divergence on a specific time frame, my conservative estimate is that it's going to meet the next closest moving average. Look back to what I just said about the possible 3 scenarios that could happen, regardless of if the price action meets the next moving average, the next closest moving average on that specific time frame, or not. Refer back to what I said in XLMUSD. So currently, the 3-day 21 MA is pretty far down there, about 26 cents. That's something I'm looking out for, okay? So even though it looks like we have a continuation pattern here, I would not lose track of that double bearish divergence on the 3-day time frame, because this could possibly be turning into another pattern, okay? Now let's take a look into the bullish and bearish case scenarios here. Bullish case scenario, price action breaks out of the symmetrical triangle pattern, go towards its measured target. The closest, the key resistance right now that I'm looking at would be the fib level right here at about 44 cent area. That's the bullish case scenario, very short. Bearish case scenario, price action breaks below this bottom trend line. I would have to either adjust this pattern into a wider symmetrical triangle pattern or into something else, depending on where that price action lands after it breaks this bottom trend line. The next closest moving average I am seeing right now, well, the 12-hour 50 MA is within the symmetrical triangle pattern. Let's take a look into the daily. I would be looking at the daily 50 MA. That would be the next key moving average. There's going to be quite a bit of Fibonacci retracement levels between the bottom trend line and then. So let's see where the price action will actually bounce if it actually does break the bottom trend line, and I would adjust this pattern accordingly. Now, these are my bullish and bearish case scenarios for today for these markets. Let me know if you found it helpful. Give me a thumbs up if you did. Let me know agreements, disagreements, feedback. I would love to hear them. Hope you manage your risk carefully, and if you would like to see any more of my most recently uploaded videos on YouTube, you guys can check out my links up here on YouTube. See you next time.